Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone's doing great. All right, so let's get to it. Got a lot of questions already in the queue. All right, so first question. Oh, Caterpillar. All right, let's get to it. Sure, let's get to it. What on earth? Hey there, Alex. What on earth happened to Caterpillar? There was some news about their margins going into 2022 or 2023. Remember, the markets are always a discounting mechanism, so they're always looking ahead. In this case, they looked ahead and panicked. And let me show you the chart. All right, so here's the chart. Now, keep this in mind, and I think this is very, very important. And this is where a lot of the secret, not so secret of sector secrets plays into what we're doing. Before CAT sold off, in terms of relative outperformance across the sectors and across the indices, IYT was already kind of struggling. Remember, IYT went neutral back on the 4th, right? And we had some more neutral action. So last Friday, we went neutral, and we've been really neutral all week till we finally went negative yesterday, or sorry, the 9th, and then we went negative on the 10th. So the negative, the red grab candle actually occurred on was it Wednesday, I guess it would be. Then Thursday, we can see the break. So, not that any tool is going to somehow tell the future, but when you look at relative outperformance, it just hasn't been in the IYT. And this has actually been a sector that we've been far more patient on in sector secrets. We've been a little bit more ambitious on the XLI, because if you compare relative outperformance, this looks far better, right? We have green, green, green. Yesterday, we had a blue grab candle. And so even with yesterday's blue grab candle, let me point something out. And we'll be talking about this a lot more. Hey, the webinar for my next class is next Wednesday. So if you haven't already penciled in Wednesday, 8 p.m., do so, because I'll be talking about things like this. Now, this is basically the last, two dip candles. And so if I'm mostly green, we dip to a blue, the relative outperformance in the XLI has been better than IYT. So you'll notice I've been sort of trading around the IYT narrative for now. So that's really what it looked like. Does it look like a normal pullback? This is where a lot of traders do get caught with, two things. One, you're right. I don't think anyone was going to foresee the fact that Caterpillar was going to have this unscheduled news about, and again, I believe it was about their margins. However, please remember, in terms of the larger picture, in terms of the sector was already looking pretty, challenged, if you will, before Caterpillar moved lower. So some of these narratives like cat and deer, they haven't looked that good for a few days. But I think the IYT is really what was telling you, kind of giving you that heads up at the sector level to be cautious. So thanks for the question, Alex. Hey there, James. Good morning. With a move lower in the Dow, let's jump on over there. With a move lower in the Dow, be considered a pit bull low. So we talked about the pit bull low in the live trading yesterday. We talked about it as a reminder earlier this week. And so the pit bull low, and if you follow the free videos at the Simpler Trading YouTube channel, you will know that I talked about the pit bull low getting actually put in Wednesday into the close. And let me see if I can't find my pit bull low notes here for you all. All right, so let's see here. Just bear with me. I'm going to grab these pit bull low notes. All right, so if we're looking at where is the screen I'm looking for? Pit bull low. What we want to take a peek at is actually the close going into the session. That's really what we want to take a look at, the close going into the session. So ultimately, let's see here. Ultimately, we have, there we go. Boom. Okay, found him. So here we have and notice here, looking for bearish momentum, 30 to 60 minutes at the end of the cash session. In other words, going into 4 p.m. So we saw that Wednesday. So the way that I looked at the pit bull low getting put in was Wednesday. A lot of folks look at pit bull low Thursday, even Friday. I look at the pit bull low window Wednesday through Friday. So I think that got put in on Wednesday. I'm not really looking for the pit bull low any longer this week. I believe Wednesday's close was that pit bull low phenomenon. We could even say that the wick on Thursday retested that on Thursday's 8:30 a.m. CPI number. But again, by and large, I'd say Wednesday was that pit bull low. And then as we were looking at some of the trades for our live session, James, on Wednesday, you'll notice that I was already kind of getting geared up for that low coming in the next couple of days. So we've already built our long positions based on that expectation of that 72-hour window. And so am I looking at necessarily it being bullish today? We'll see how it comes. Remember, pit bull low is not for me about predicting we're going to start to punch up to higher highs or predicting bullishness. It's really more about what's the dip that we want to buy into. I'm not going to presume that I know now that today is going to be bullish or that yesterday was going to be bullish. All I'm looking at is, was the pit bull low dip something that merited our looking for long calls, which we did. So now, based on if there's any place that I'm going to be bullish on, and again, check out the free videos that I do for the Simpler Futures over at the YouTube channel. One of the things I mentioned is we're going to start to see the market play catch up. So if you head on over to the Simpler Trading YouTube channel, you'll see yesterday's free video was about which markets now are going to start to play catch up. And for me, I'm expecting that to be very likely things like XLI and YM and some of those markets that were basically laggards, even XLB. So check out that video. I think you'll really, really like it. So next question. Hey there, Neil. Markets opened up amazingly bullish. What do I expect on June 18th? So you're asking me what I expect next Friday? Got no clue. Nobody does. Nobody does, Neil. If they tell you what's going to happen on June 18th, gosh, number one, either they have a crystal ball or they're trying to sell you something. Nobody knows, right? Nobody knows. However, if we can look at the pit bull low as support, and if that support holds, we can presume that was a good buy level. And then what happens from there? Well, we hope that the path of least resistance that has been up continues to move higher. Now, the question that I love, the part of your question that I love here, is should we get out of our positions on June 17th? Look, I'm not looking to get out of anything before triple witching, no, but I would love to be at a point where I can scale out of some of the winners. I mean, yesterday we scaled out of winners in healthcare. We had some monster winners in the XLV and in Pfizer, and this is straight from the Sector Secrets room. So we had that long position. So what I would like to have is situations like this, where XLV, Pfizer, we're hitting initial profit targets, so I can go into next Friday with a break-even stop, having realized profit on a portion of that winning position. That's ideal. I'm not going to get flat because of triple witching, but I'm going to be aware that there's going to be more volatility. And if I can be in a position where I'm managing a winner, meaning I've moved the stop up and now we want to see how high is high, that's a much better place to sit going into next Friday. So thank you for the question. Am I the same opinion as John that after all-time highs? You know what, gang? And I absolutely, this is always, if John's got a setup that you like, and I get a lot of questions like this, it doesn't matter who it is. It doesn't matter what my opinion is about what John's opinion is and vice versa. If there's a setup that he's walked you through, so here's the truth of the matter. How many chefs do you want in your kitchen? If you want a meal being made and there's a single recipe and you know a chef said, look, I'm really good at this recipe, follow that chef. So I do get some of these, and frankly, I usually skip over them because if someone's giving you a plan and you know they're a great trader, John clearly is a great trader, follow that plan. This isn't like medical insurance where you need a second opinion. So this is the best way that I can treat this. If John's put you in a trade and you've got a plan, follow that plan. So in the future, questions like that, usually I'm going to skip over, but thought, you know what, it's Friday. We'll go ahead and tackle them. But generally speaking, if you guys have been following what we've been talking about here in Charts and Coffee, and if you've been following the free videos, you know that I'm looking for a pullback buy, and I'm very bullish going into summer. I'm super bullish going into summer. I don't know how many weeks it's going to take. Again, don't ask someone else to comment on somebody else's analysis. That's their analysis. And if it makes sense to you, follow it, right? And I think that's a really important aspect to following anybody's trade setups. They're going to have different tools. They're going to have different timing, etc. So if at any time you guys are curious about how I'm looking at the market, check out those free videos at the Simpler Trading YouTube. Check out the updates over at countdowntrader.com and the way that we're analyzing markets here in Charts and Coffee. So thanks for the question. All right. Next up, when futures contracts dates roll, like today, yes, today is the CME roll date. So the June contract is now going to roll out to September. That doesn't mean that, to your point, Paul, great point. That doesn't mean that volume is necessarily just going to stop in June and all flee to September. What you're actually going to see is the first transition is going to be June to September open interest in that futures contract. So open interest is going to start to migrate at a quicker clip into September. September is not going to have more volume or open interest than June likely today, although you're going to see that June's going to start heading lower and September is going to start heading higher. Volume is still going to be higher in June. So as a day trader, I will continue to trade the June contract probably until next Tuesday, Wednesday, or when the volume in September starts to at least match or exceed the volume in June. And we can measure that day to day. So if I am taking my day trades, I'm taking them to the June contract. If I'm interested in longer term trend follows that could be days, if not weeks long, ideally, yes, we really want to, and we have been wanting to focus on September. So when do you start thinking about the next contract out? To me, 2 weeks from the expiration for the first notice date is when you really want to start thinking about, do I really want to put a longer term position in a contract that's winding down and inside that 2 weeks, or would I rather go out to the further out contract? So I hope that makes sense. And that's what we have here in terms of, that roll psychology. So thanks for the question. Great timing on that. All right. Bring on the brains. That John, that might belong on a t-shirt. I like that. All right. Next up, lumber and home builders seem a little bit weak of late. Any thoughts on LEN or LB futures? I've had my eye on Pulte Homes. But you know what? I love that you asked this question, David, because the aforementioned IYT Caterpillar conversation is very much where I'm stuck with ITB XHB. So what I do is I put certain names on the radar. There's certain things that I'm watching before they turn into an alert. So I'll give you a process. It's really important to me that you guys know what I'm looking at before there's a trade setup alert. So I've got a number of things on the radar that I send out and say, hey, look, this is where my watch list is being built. These are names that I'm adding to the watch list. Just yesterday, we added XLF to the watch list. So back to Pulte Homes and Lennar. So half the reason that I am not necessarily looking for the Lennar and ITB XHB is I just don't like the structure of them. In fact, look how long Lennar, specifically to your question, has been printing red grab candles, and that dates back to May 12. So no, I'm really not necessarily interested in Lennar regardless. Pulte Homes is a little bit better, but again, if you start at the sector level, you'll find that there are better sectors that have more clarity than XHB and ITB. All right. So that's why I've been watching them, but I'm really not yet interested in taking a trade there yet. Because again, the structure isn't awesome. And it's probably going to look a little bit better the closer we get, as you can see, down to that Darvis level. My new Darvis tool, by the way, that we're going to be officially unveiling next Wednesday, works intraday amazingly well, but works end of day too. So if you're looking for both intra and end of day automated support and resistance, and then the signals that come from the Darvis. And remember, I look at the Darvis as a support and resistance tool. So I'm using definitely the influence of Nicholas Darvis's original Darvis box, but we don't call it Darvis box because it's not a Darvis box. We've taken the Darvis language. It's definitely homage to Nicholas Darvis. We're using some of the patterns, but we have tweaked it, and that's why we call it Darvis. And now we've got these Darvis signals coming out. And like I said, next Wednesday, we'll be talking about them. And the reason I bring it up is take a look at what we're getting. In this area, Darvis, and in this area, it's starting to look like we could have an oversold support zone potential buy. But remember, look at all the red and the green and the blue all mixed up. This is a sideways market. Look at the yellow down here in the JT multi. This is a sideways market. So this is not one of those beloved double greens that I'm always going on and on about here in Charts and Coffee. All right. So, and by the way, if you are interested, again, in either Sector Secrets and of course, next Wednesday's webinar, head on over to countdowntrader.com because that's going to be the easiest way to notify you of the upcoming webinar. And then you can check out what we're doing over at simplertrading.com/sector for my longer term plays. All right, next up is, let me see here. Are we going to have another sale? Oh gosh, that Memorial Day sale was unbelievable. I don't know when we're going to be having another promotion. I'm not ahead. I'm not in charge of the promotion calendar. That's way above my pay grade. I'm just here to find trades and walk you all through them. I do not know, my friend. I will find out, but I'm sure we'll all find out when the next promotion calendar goes out. Do we have 4th of July sales? I think we do, but reach out to the office. Give the office a call. You can find their phone number at simplertrading.com and give the office a call and see what they can do for you. Okay. All right. So next question here is XLF. All right. So XLF is a trend follow for me, straight up trend follow. And again, I think if very important to focus on the tools that you use and the tools that overlap, if you're looking at, you mentioned a squeeze. I'm not looking for a squeeze in an uptrending market, right? So if you've got something that supplements the analysis, terrific. This is straight up a double green uptrend. This is a relative outperforming sector. It's a relative outperforming sector in the S&P, which is, again, pushing those all-time highs. And we've got a dip. I mean, look at the last 3 signals and dips. You think I'm going to buy this one? Absolutely. We're looking for setups in XLF. So do I have any thoughts on squeezing? I don't, because this is a trending market that through my tools is a dip. Now, if on top, and the squeeze, by the way, works great in a trending market because the path of least resistance and the directional bias is so much clearer. So what I'm going to look for is an opportunity to take advantage of an exhaustion move into a support zone or a buy zone, right? And then whatever tools you might want to supplement with that work for your process. It could be a ready aim fire. Maybe you're a big fan of the voodoo lines. Maybe, again, you're looking at the squeeze. This for me is not a squeeze environment. This would be a squeeze environment right in there, right? So if you have supplemental reasons to sort of say, yeah, I think the path of least resistance is up. Terrific. What I'm looking at is, just so you have the process down, green grab candles. That's bullish, gang. Support at the wave. Fantastic zone. And sometimes a squeeze is going to complement a pullback like it did in the setup back in March. They can work together. That's what's so great. And then look at this double green. I mean, this is a no-brainer buy the dip situation that's been working actually throughout the year. Will it stop working at some point? Of course. But for now, let's follow the trend, buy the dip. And then, if I like the broader XLF, then I can start getting a little bit more granular into Bank of America, Wells Fargo, and then it's time to do some relative outperformance scanning to find which market might be a relative outperformer, what might look even better, what's actually holding amidst the sell-off in a better way, right? And for me, I like Schwab. I've got my eye on Schwab, and take a look. Let's go back and use the same process. Double green, yeah, for the most part. When we go yellow like in here, that's not going to make me reverse. That's going to make me say, we might deal with a little bit more chop, but my overall directional bias is going to be influenced by the fact that the trend that preceded the chop was up. Stick with the path of least resistance. Buy, buy, buy. Well, guess what? Any idea what you think I'm going to do now next? Does that make sense? The more that we can take the analysis and make it, well, simpler, make the setup more obvious, make sure the environment is color-coded, make sure the momentum and sentiment and the trend is color-coded. That's really what I'm looking at. And then sort of the thing that we're definitely going to talk a lot about next Wednesday is, well, how do I make the signals more obvious, whether they be a volume-based signal or whether they be a Darvis-based signal? How do we make those signals more obvious in the right environment? All right. So with that being said, I hope that helps. I hope that's something that definitely resonates with a lot of you, which is the process, right? If you have different tools and processes different than mine, cool, just layer them on and make sure you're using them in the correct environment. And so, for me, again, with the question of the squeeze, I mean, of course, that's our flagship indicator here at Simpler. Think about the environment where the squeeze would work better. If you're looking for a squeeze, the way that I do it, the best way I know to do it is have that coordinate with some blue graph candles. And if you're looking at multiple analysis, treat it like a chef in the kitchen. If that's the chef cooking that dish and you know that dish is tasty, stick with that chef. As they say, too many chefs spoil the stew. I think that can be true, and you'll get a certain paralysis of analysis with that. I'll see you all in the next Charts and Coffee. Have a terrific Friday. Be good to each other. Have a great weekend.